In the energy quadrant, taking a look at the May crude oil futures contract, crude has now dropped 2 straight sessions for the first time since late March, and today's move is the lowest move to the downside on a percentage basis since March 20th. Since a rotational low on February 5th, however, even with today's sell-off, WTI crude is still up 19.4%. On the high today, we did have a decent move started to the upside. 86.98 was the high. That was up 0.64%, so between 0.6 and 0.7% higher. The low, though, 85.09, took us down 1.55%, and we finished the day down about 1.33%. Iran is part of the reason for the sell-off. Iran has decided not to close the Straits of Hormuz so far, and that's a good sign given that over the last few days, reports were swirling around that some of the geopolitical tension in the area would cause Iran to close the Straits, which is, of course, a major passageway for a huge portion of OPEC's global oil exports. Iran has been threatening some sort of retaliation against the West since the consulate in Syria was attacked, but nothing has happened so far, so no supply disruption is actually in existence. So you could easily see, given these statements today, some profit taking place. And that would not be unusual to see a fall like today after such a run up in price. Even with today's drop, WTI crude is still up 19% in 2024 with very few significant rotations to the downside. And again, taking it back to that February 5th low, it's up 19.4%. So given that, you could see that with that Iran threat taken off the board by Iran, at least for now, you could see some profit taking, and that's likely what we saw today.